But let's chat just a little bit about maybe just some timeless. I mean, you've kind of already dropped a couple of things here, but some timeless tax tips that you might have for us as business owners. What are some things that we should be thinking about as we do our own tax planning? Any advice for us?
One bit of advice that is age old that still works is the concept of bunching. And what bunching means is to pay all your expenses in 1 year, because you may have a situation where you had medical expense last year and you have medical expense this year. And in total, you would qualify for a medical deduction on if you itemize. But because of the spread among 2 different years, you don't. It might be the same way with a charitable contribution. You may find it more advantageous to do it all in 1 year. Consequently, if you're not going to benefit from a charitable contribution that you would make in December, why not make it January 2, the next year? And then take the following year's contribution and donate that in December of the same year. Suddenly you're in the same tax year, and you can probably benefit from something you wouldn't have otherwise benefited from before. What's interesting is we used to talk about if you sold a business or any type of an asset on what's called an installment plan, where you're collecting your sales price in multiple payments. Were you to sell a business in December 2021, calling for a payment in December 2021, a payment January 2, 2022, and a payment January 2, 2023. You sold a business that requires payments in 1 year and 2 days, 3 payments, and you're in 3 different tax years. Perfectly legitimate. IRS will not upset it. The courts will respect it. That's smart tax planning, because you're using multiple years. And you really want to stay ahead of the curve. Do something like that. By the same token, you want to pay attention to the likely outcome in Washington of any tax increases. I might have said increases or reductions, but the reality is they look to be going one way only, at least the discussions. Because I have told many clients, you have a large gain, the sure thing is to recognize it now, because I know that there's not going to be tax law changes in 2021. I can't say the same for 2022. And I do know that what's proposed are rate increases. So you're probably better off taking the chance, biting the bullet, and paying the tax now, which is exactly what I had said at the beginning of this podcast. The way to save tax is to pay tax, but it's simply through optimization.
Yeah, that's super smart, and using kind of those rigid deadlines that the IRS has, for taxes to your advantage. So, selling and basically receiving payment for, really whatever asset, but particularly a business over 3 years, but really it only being